Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe. If you do like what you're listening to, please inform your friends and family and spread all over social media. It is imperative that you get back to learning finances and understand how the world really works. Because once you understand how the world really works, you understand everything is planned out. And guys, you know I go over that funny article first. Basically, we have the New Yorker suspends Jeffrey Toobin for playing with itself. Guys, it's amazing. And it says suspend. Didn't fire him. Suspend on Zoom. Come on, guys. And he's always pushing the Hegelian dialectic. Always. Now, getting into the stocks, guys, we had Western Digital and Micron soar yesterday, guys. Remember, those were the stocks, the tech stocks I've been told you. Make sure that you invest in. Remember, not your financial advisor. It's not financial advice. But I went over this, guys. I told you the ones, the cheap stocks, tech, that's going to soar. Now, of course, Western Digital right now is not paying dividends, but of course, it's just suspended. So hopefully that'll be back. But the stock still soared. Now, as we know, we have the stimulus talks. What did they do in the media today? Oh, the talks are on. Trump wants to go big. Nancy Pelosi saying the Democrats have come a long way. So, guys, we see it. They just playing the public while people are getting evicted. No money, no job. And the only thing they're doing is playing the Hegelian dialectic. What did Anthony Sutton teach us? They're experts at managing conflict. Never finding a solution, but managing conflict. And, guys, what I tell you, they just want to get this money as close as to Thanksgiving as possible. So what are the masses going to do? Hand that money right back to those no good son of guns. Now, basically, we have Netflix losses. Now, guys, we know Netflix hasn't had any earnings, I think, since they've been formed. So it's not about that, guys. The whole point of Netflix and Roku is an agenda. Get the cord cut so they can bring in this 5G. That'll be cooking you sooner or later. Now, we have Snap also soared now today. Now, Snap soared. Now, remember, guys, this is all about tech. Snap, Twitter, Facebook. You know those stocks are going to keep going up, especially when Facebook comes out with that Libra and they can actually pay people to do different tasks. Guys, crypto is going to be amazing. But I know this is my stock channel, so I'm not going to talk about that. Now, we have getting into earnings, guys. As we see, it's easy money in earnings. That's what I went over. Remember that. Tesla is tomorrow. So I'm going to give you the three that I'm going to be looking at tomorrow. So I have Tesla. I have CSX. Of course, the railroad. The #1 railroad. I'm going to be looking at that. Next Era Energy. I went over that a couple videos ago. So actually, basically, they're bigger than Exxon as far as the energy sources. So I'm definitely, Next Era Energy is definitely going to be a play for me tomorrow. But guys, do your own research. Now, basically, we have Weiday, W-E-I-D-A-Y, in China. The trading halted. Went up like 500–600%. You can play this in the morning. Whether you play it to go up or play it to go down, you can play it. But first, do your research. But remember, guys, it's China. Guys, I'm telling you, the Asian markets is going to be big. Weiday is the largest auto-backed financial solutions in China. So, guys, make sure you're doing your research. I can't say that enough. But, guys, that's all I have for you. Don't forget to like and subscribe and spread this channel everywhere. Have a wonderful day.
It's blaming its lower subscriber growth on just a banner first half, and that they couldn't keep up that kind of momentum because that was really in the pandemic. Do you think it's competition, though? Do you think that's going to start to weigh on Netflix with Disney Plus having such a good start? Peacock, our parent company, also launching recently. Is that going to hurt Netflix?
Well, I think, separate and apart just from its impact on Netflix, who clearly was the first mover into this space and created an unbelievable platform and obviously out-invested in the direct-to-consumer streaming market, everyone they dealt with and compete with. But obviously, the arrival of Disney and others is real and serious. It feels to me Netflix is almost competing more with YouTube on a certain level, and that they are premium, super premium content, but they want to be content for everyone around the world like YouTube is. Whereas Disney still feels very branded, and I think within its brand, but obviously the most powerful brand in the history of content potentially is Disney. So that's very real for them on a competition level. And I still look at, even with the renewed competition, the head start Netflix has not only in the United States, but around the world is pretty impressive and extraordinary. And so I think obviously competition is arriving, but the fact they already have 195 million people, or whatever the exact number is, subscribing is a giant number.
Interesting you compare them there, Ben, to YouTube, and I get the reason for it, that global reach and the subscriber number size, but the big difference is cost, and we've got a wall here of some of the prices available at the moment, ranging from free from Peacock, to the over $10, close to $15 for Netflix and HBO Max. Does the quality of their new originals, particularly when they're losing shows like The Office, warrant that premium price at the moment?
Well, when I see the volume of originals that they have, it's pretty impressive. And in this moment where we're all starved for new content because the production slowdown not only affected Netflix, it affected every single carrier of programming in the world. They still are offering more today in terms of the content than anyone else to access. I think the value of the libraries are real, though. And what I'm seeing and curious about, just depending on the level of wealth that particular household has, people aren't accelerating the cord cutting and the net spend down as much as I thought they would. And obviously the pandemic has accelerated all those trends more than any event could have predicated. But the fact that there is so much investment to make in the content still, and capital to express, I mean, it just feels like they have a real shot to continue their momentum and leadership, and other people are just keep adding costs. Like, I added Disney, I didn't cut anything. I have an Amazon Prime membership, so I'm keeping that Prime membership for multiple reasons. I'm getting Apple still for free because I bought a phone, so I'm yet to really have to pay for it. I'm accessing Peacock for free. So there's not really a lot of choices I'm being forced to make. I already was an HBO subscriber, so I haven't quite noticed a difference in my monthly budget.
Ben, always a pleasure. Thanks so much for joining us.